Okay, peeps, welcome back. So we're going to be talking about the Defiance index-based ETFs today. Let's get it. So what exactly are we looking at here? I've been seeing a lot of videos and information lately on these Defiance indices-based ETFs. So you can see here that we have the NASDAQ 100 Enhanced Options Income ETF, which is ticker symbol QQQY. And you also have the S&P version of this, which is JEPY, not to be confused with JEPI. So if we go over here to the website, this is the Defiance ETF's website. You guys can look this up for yourself. I'll try to leave it in the link for you down below. I tried to upload a different video earlier, but for some reason I was getting errors and I couldn't do it. So we'll see if I can actually leave the link for you or not. But you can see that they don't currently have a distribution real yield. Their payment is monthly, so that's always good. So it says here that the QQQY, the first put right ETF using daily options or zero DTEs to seek enhanced income for investors, which is paid monthly, aims to achieve consistent and outsized monthly yield distributions for investors coupled with equity market exposure to the NASDAQ 100. It is an actively managed ETF that seeks enhanced income constructed of treasuries and NASDAQ 100 options. The strategy's objective is to generate outsized monthly distributions by selling option premium on a daily basis. The fund uses daily options to realize rapid time decay by selling in the money puts with zero DTE. And again, puts are the bearish term for options. So, investment objective, the fund's primary investment objective is to seek current income. The fund's secondary investment objective is to seek exposure to the performance of the NASDAQ, subject to a limit on potential investment gains. Again, this sounds very similar to basically a covered call ETF. So, covered call ETF is theoretically like around 50% upside, 100% downside. But again, you have to understand about market cycles that 65% of the time the markets are bullish and only 35% of the time they're bearish. And as I've told you guys before, the markets usually go up for very long periods of time, like 10 to 15 years on average, before a bear market happens. And the bear market usually only lasts like maybe a year to 3 years. I mean, with the zombie virus dump, we saw like a 3-month bear market. And then the Fed came in and basically started printing crazy amounts of money and bought everything. So something to keep in mind when taking a look at these funds. You can see they're relatively new, only got about 7 million in assets. They give you the NAV price. So basically anything below the NAV price would be a discount. Anything above is a premium. They tell you what that is right here. So pretty much you'd be looking to buy for the best price, either at the NAV or below the NAV. Shares outstanding is pretty small. Again, when the fund NAV grows, probably expect the outstanding share count to grow as well. So they have a similar expense ratio. You can see that this fund in a lot of ways is pretty similar to the yield max ETFs. I guess the difference is that you have index exposure instead of single stock exposure, which is, that's nice. It's good to get a little bit more broad exposure and still get passive income on top of it. So you can kind of see their positions here. Here it gives you a overview of what to expect. They have all this stuff X'd out because they haven't paid anything yet, but you guys can see all this information on this website. So they have a bunch of different ETFs here. Again, this is the S&P version. And these are both expected to pay out monthly. So we'll take a look at, we'll take a quick pop on YouTube here. If you guys type in Defiance ETFs on YouTube, you'll be able to see this for yourself. They talk about, what the expected payout is, who's running the fund, all that jazz. I did actually watch one of these videos myself in my free time, and I did see that they expect the payout to be somewhere between 50 to 60%. So this is something that you guys could basically buy right alongside the yield max ETFs. It is a legit fund. As you guys can see, it shows up here on the Nasdaq.com. There's no dividend history yet because they haven't paid a dividend. You can also buy it on Robinhood. So this would be the Nasdaq version. And we type in JEPY. You guys can see the S&P version here. Now, do we have any shares currently? No, we don't. As you guys can see, there's no shares of JEPY or QQQY here, but you can purchase it on Robinhood. You can also purchase it on Webull here, as you can see. And type in JEPY as well. Also on Webull, but again, it's relatively new. It's not paying a dividend currently. So basically, our thoughts on the fund is, I mean, it's a great idea in theory, but we want to see results. We don't really want to pick this up until we actually see what the dividend payment's going to be. And in the meantime, we can just pick up some shares of some other positions that we want to hold long term while we're waiting for this thing to do the zero DTEs and produce some premiums. We don't really want to buy in and then it takes like a month or two for them to actually pay a dividend, because in the meantime we could have been buying anything else that pays dividends and getting paid in the process. And as you guys know, timing in the market is important when it comes to dividend growth. The more time you have in the market, the faster the dividend snowball accrues. If you go an entire 2 months without a dividend because you're trying to front run the dividend of these funds, then that's 2 months that you put money into something that you're not going to get paid 2 months for. Nothing against that. If people want to do that, that's fine. I'm not knocking it. It's all good. Everybody's got their own strategies. This is just ours. We want to get paid while we're waiting to see what the payment is, which is why we have not picked up some of the other yield max funds that were just released. But yeah, so I mean, it's a great option. If you don't have index funds, you can buy this instead. We do actually have some index funds. So if we bought this, which we're thinking we will, honestly, I think that we probably will when they come out with their first payment. We'll see what it is. We'll pretty much have that right alongside our retirement account. And so yeah, this is our thoughts. If you guys have any questions, comments below, please leave it below. We'll be happy to answer it. This is definitely a good way to diversify among high yield investments. It's always good to have some diversity. One other thing that we could take a look at is, since you guys are probably wondering what are zero DTE options, we'll just type that in real quick. So if we click on Investopedia here, you can basically see that there are options contracts that expire and become void the same day that they're traded. So basically, it's like intraday trading of options. I actually do intraday trade futures. I traded this morning, but the market was extremely choppy going into the FOMC meeting, which is we're going to talk about later today. The FOMC meeting is actually happening right now. It started at 11 a.m. Pacific Standard Time. But this is basically the equivalent of day trading options, pretty much is what it is. So this is how they're looking to make their premium. So anyways, hope y'all enjoyed this content. Please like, comment, and subscribe. I'll see y'all later. Peace.